All right, guys, let's go ahead and get ready here just in about 2 or 3 minutes. I want to go over this. Now, I just made a video. It's going to talk you through what we were looking for. We stayed really patient looking for this move into the trendy edge here, and we'll talk again just in a few seconds. Give me 1 minute here while I go to our main. There we go. That's probably going to look a little bit better and make sure our mics are working. Test 1, 2, 3. Good. Looks good. Audio should be a tad bit different as well. All right. And I am waiting to upload this video. And like I said, we'll get started here in a second. So I hope everybody's doing well. I was in the Florida Keys for just about 8 days and I timed it perfectly. And I'm going to go over that and will kind of help me understand that most likely it was going to be a really good vacation, meaning having absolutely hardly anything on. Most of the time we were 100% cash. And I want to go over that here with you in a second. How about you guys? What have you been up to? Hopefully, you had a good week. I did, again, I was out on boats. We took 3 boats down to the Keys. That was a trip in itself. There was a lot of stuff that went wrong, flat tires. Note to self, if you're going to get a trailer, make sure you put some money into it. Make sure that you have the right equipment with you. Most likely, you're going to get some sort of blowout. It's not easy, that's for sure. All right, let's bring this video up. And good. That looks good. Now I just need to upload this, and I promise we'll get started. And this is going to be titled ES for just a broad look. All right, so we'll wait for that. And let's see what our title is going to be. We'll make it public. Yeah, ES for a broad look. Make your week trading. Make your week, make it a good week in the stock market. There we go. All right, guys. As I promised, let's go ahead and get started. Most likely, the sentiment out there, one thing that I noticed, I was trying to enjoy my vacation, but, I'm very tied to the market emotionally. I created Trendy Trading. It first started off as Trendy Options, but a lot of folks thought that I only traded options, but I actually trade futures, options, equity. I kind of do it all. This is a one person show, if you would. I like to teach one process that's going to work across the board. Now, when I say work, I mean consistency. I'm going to teach you how to understand your risk and your reward. And that way you feel comfortable every time you sit in the seat and you're ready to take a trade. I cannot guarantee you profits. I can show you proof of concept. So we're one of the only groups out there that actually use my brokerage trades. So they come straight from my API into my room so that my folks can trust that I do what I say I'm going to do, or that you just feel comfortable that I'm taking the trade that you may look into and that you might find that you want to trade. I had an experience like many folks. I went in probably to anywhere between 10 to 12 rooms before I got started, and it was just horrible. I got into the rooms because of their PL, of their fake PLs in most cases. I'd say about 95% of people I found out were using paper trading. They weren't actually doing what they say, like basically they were trimming and selling when they didn't have any contracts left or equity. It just turned into a really big poop show. And so I vowed to make Trendy Trading as transparent as I could. And again, what that means for me, being a veteran of the Air Force, I did 21 years, it means having integrity. Integrity means, again, brokerage trades and levels that aren't moving on you. So I can't go back and say, hey, you know, this is kind of what it does do this and it doesn't do that. And I love to do videos. I remember when I first started, nobody was really using videos and a lot of stuff was high insight. And so a lot of traders would show charts and those charts were high insight. It was like, oh, well, see, I talked about it, but you didn't know that because they didn't record themselves. And so being trendy, I decided, hey, I'm going to make this trendy and show people that what I say in advance can, you can take it back and you can listen to it and you can think to yourself, like, okay, what this guy is saying is for real, right? It either worked or it didn't. He said that this level was going to work and it worked, or he was wrong. And one thing I'm going to tell you is one thing is a definite in trading. You are going to lose money. If you can't learn to lose, you're going to have a very difficult time. Now, as Mark Douglas would say, managing trades, really that's what it comes down to. You could literally flip a coin, wake up in the morning and go, hey, heads, I'm going long, tails, I'm going to go short. And then how you manage that trade can really dictate whether you can be a successful trader or not. Because a lot of traders, a lot of things that I'm seeing out there right now is that traders they're exhausted, they're really angry, they're trying to blame anybody but themselves. They're not willing to take the time that it takes to educate themselves and using technical analysis. We got traders who have always relied on fundamentals, and this is a great year to show you that fundamentals really don't mean jack. Because in the long run, or in the short time frame that we've had since the markets pulled back, so many good companies out there are still being hammered. And when it comes down to that, you're just going to find that technicals, and I'm going to show you that technicals mean so much more. The news is just a catalyst. The fundamentals are a catalyst. The earnings are a catalyst. The FOMC, Jerome, everybody is a catalyst that moves price in the direction of one of our targets, demand levels, supply levels, and so forth. So that's my little intro going into this afternoon. Let's go ahead and talk about the ES futures really quick. And I want to tell you everything that basically I wrote down for my traders here, my members, so that you can kind of understand. Again, this is my futures looking glass into the future. Like literally, this is my baby. All right. And this tells me how the market's going to operate. So before the market opened, we knew that price was going to move into the trendy edge. Now, did I know 100% it would do this? No, but I was probably banking on 85 to 90% because this is an area of demand. Now, this is a playing field. Okay, so what I look for is on the trendy edges, and let's go ahead and go to a higher time frame just so that you understand. Here is the higher time frame. Okay, we have some trendy edges on here, and I can choose to take off the past edges. And for this educational purposes only, I'm just going to teach you what's in front of us right now, not looking at past edges, okay? But we use past edges for targets and new supply zones and new demand levels for the future. So the levels that we're working with right now are these blue lines, these purple lines, okay, on this time frame, all right, on the weekly time frame. And what I want to show you is when we open and gap down, we were very close to this lower trendy edge. Matter of fact, if we take it into a 5-minute, I can show you really fast what that looks like. And now you're going to notice that new trendy edges appear. Again, every trendy edge is different. And it's for different types of traders. We have scalp traders, intraday traders, long-term swing trading, even leap trading. Okay, I have it for everyone. Just depends on where you are and what you like to trade. Now, notice that price opened up. Okay, and we got immediate sell signal coming out of this, and this was the trendy edge. And when I made the video, if you go back, once it uploads here to YouTube, you can kind of watch and see what I say about this move to the downside. So we move to the downside, you wait patiently, and what I was waiting for is the move into the trendy edge. This could be a demand level. This could be a support level. This could be your own level. What you want to look for is a reclaim of this before you even think about getting long. Now, in this market itself, um, as long as we are staying under these clouds, I want you to understand that this is resistance until proven otherwise. Now, this is a 5 minute cloud. Okay. 5 minute cloud. We're going to run through all the different clouds, okay? So I'm going to take you from a 5 minute. Actually, we're going to go to a higher time frame. Let's go to a 3 month or quarterly time frame, okay? This is the inside and down. I actually just did a video on SMH, the semiconductor space, and once we went inside and down, talking about candle formations. So for all my supply and demand traders out there, you know that this looks familiar. Should be your first sign to raise some caution. Okay, so once this candle closed on the quarterly, you should be thinking, uh-oh, like which way are we going here? Is it an inside and up? Is it an inside and down? Well, guess what? When the next quarterly candle opened, it never opened over that base. And once it started to drop below the previous body right there, guess what? We were cautious. Okay. And then you have to start looking for different targets. Here in the trendy room, we're looking for, again, trendy edges, EMAs, Fibonacci, and so forth. Okay. So in each one of those, we just slowly collect, right? Slowly collect until we find ourselves at a target. Now, going into this year, this target right here, this blue level, notice how we came very close and we bounced up. Well, I'm actually looking for price to hit this. So even though we hit that pink line earlier, we got a bounce out of it. It doesn't mean that this is the bounce that saves the market, folks. The overall trend is inside and down with some relief bounces. And we'll talk about relief bounces here in a few minutes. So again, pulling back, looking for price to come into one of the trendy edges. Okay. And so far we've hit the pink one, but we're looking bigger picture for the blue one. All right. Now, the cloud is here. Notice that we are in the cloud. When you're in the cloud, I want you to think to yourself, choppy, just choppy. Okay. You can go back and study the clouds and you could see, you know, in this case, it's always worked as a cushion. This was your support. Every time we came in, it was a great buying opportunity. And here we are again. Okay. So you could be thinking to yourself right now, we're still above this support level, this trendy edge. We're in the cloud, but it's choppy to down and possibly a great place to buy. But these are quarterly candles, and these quarterly candles say, hey, you got to wait a while before you get what you want. Right? So, I mean, look at this in 2020 after COVID. You know, I'm sure traders were like, it's the end of the world. You know, things are going to end. And if you could just stay patient, it ended up being something beautiful for you. Now, again, talking about it and doing it are two different things. Okay? Talking about it and doing it are two different things. So I want to help you just understand a little bit about technicals and the consistency of using good levels. Let's go ahead and move down to the monthly. Notice here in the monthly, folks, all right, we moved down, we moved into the cloud, and you could see here things just continued. We could not make a higher high above the previous. We just made lower highs. Matter of fact, this is a nice channel down as we speak. Again, on the monthly, we actually have an inside and down. Okay. So once again, on the monthly, things still looked ugly and we continue to the downside. Okay. We're still in the cloud, choppy to down. Weekly, check it out. The weekly, we identified this low here, folks. What I mean when I say we is I talk about myself. I'm teaching. It doesn't mean that everybody's going to do what I do. Okay. Trading is very personal. It's super personal. And I don't think it's very easy for people to get up and just listen to someone and go, you know what, John's going long today, so I think I'm going to go long. That's not necessarily how a lot of people do things. It's easy to go out and try to use different tactics to try to make trading look easy. I try to make it as real as can be. It's very, very difficult. All right. And currently, the market stays difficult. But what I want you to see here, folks, is that even though I might a peg this low, it took about a day for me to really say, okay, well, I think I'm going to go long here, because it didn't touch my level. And so because it came so close, I was a little on the edge. I was like, I don't know. And then I started to look at other things that I teach the room, like talking about the dollar, the 10-year treasury, looking at bonds, looking at all the different charts like SPY, Qs, DIA, IWM, putting all that stuff together with the skew, understanding why I wanted to go long. Now, as I was going long, I kept looking at the divergence between the 4 hour, the daily, and the weekly. And just like I'm showing you this week, again, divergence, let's go over that. Price and the cloud. See this space here? This is a great move. So if for some reason something came out and price were to jump right now, you could look at the cloud as being resistance and this level as being support. So this level is 38.63 and this cloud is coming in around 40.55. So you can see that's almost, it's just, yeah, it's just under 200 points, guys. So that's quite a bit. That's $20 in the SPY. So you don't want to miss out on opportunities and understanding where we are as far as divergence is concerned. So once again, I believe that we're creating range for the big game. In this case, what is the game? That is the catalyst that moves price to these levels. The catalyst, in my opinion, is looking at Market Watch and understand what's coming up this week. So again, we have Jerome on the mic. On Wednesday, we have numbers coming out on Thursday and Friday. So we're getting the game day ready. And that's all I want you to understand. So the more divergence, the better. All right. That's my opinion. The more divergence, the better. And right now it's looking pretty sweet. One thing I want to tell you about the weekly, once we went long here, it was a warning as soon as we got up here. Notice how the cloud continues to be resistance. Let me go ahead and turn off my lines here so you can understand. Okay. So as a new trader, you might be confused. You're like, well, I don't quite get it. Like why here? Why is this resistance? These are just EMAs, and basically when you're above an EMA, things look great. When you're below it, they turn into resistance. Notice that sometimes we can peak above these clouds, all right? And when we peak above them, what you should be thinking is, hey, I like this long. I want to stay in this long as we're not breaking below. But you always have to be looking up and to the left and understanding, are there levels? Like topping wicks. I have a video out there that teaches you all about topping wicks. So if I were to draw a line through these two topping wicks and I were to come across here, this would be, I mean, a novice, really. If you're kind of new, it doesn't take a genius to do this. You just take a line and you pull it across there, and you can see that this is going to be resistance until proven otherwise. Now, in hindsight, let me show you a trick. There is a wick here, and at some point, maybe a few minutes of the day, or maybe even a day or so above this line, things probably looked really, really good. And people were like, hey, we're above that resistance. We're going to the moon. Things are going to look great. We might even see all-time highs. Well, if you didn't have the trendy edges or some sort of level that identified that we were very close to supply, then guess what? You might have been taken to the cleaners, because once again, people are getting long up here because of technicals, but they didn't realize that we were just underneath a big pocket of supply. And if you were to turn on volume profile or something like that, you would see that there's actually a lot of volume up here, selling volume. And so you knew to be cautious even if you got past these topping wicks. Okay. All right. So price breaks down below that. Once we break down below, then it's pretty much sayonara. See you later. Come back another day unless you like to get short. And you want to be looking for levels that may create some sort of bounce. Now, when I look over into the left, I had a signal here that told me, hey, we could find a bounce here. Indeed, we found a bounce. And like I said, I will tell you confidently that I did trade this to the upside. Now, where does that put us now? All right, inside and down, gap down, resistance for the cloud. That's what we know on the weekly. Sorry about that. I got my arm on my other chair here. It's making a little bit of noise in the background. I apologize. I'm going to take you into the daily. All right, and now you can see here, this is also resistance until proven otherwise. Look how beautiful that cloud is, folks. If you don't have anything on your chart, get a cloud. It's going to really help and change your game. Okay? If you want to learn about trendy edges, again, come check me out. All right? I'll teach you about the cloud even more. There's a way that you can trade off this cloud. Again, mine's a little bit, well, I wouldn't say a little bit, it's a lot more complex than any cloud that I'm aware of out there. There's a lot firing off in here, a lot of different code behind this. So, again, divergence. One thing I do want you to note while we're sitting here, notice how the candles have went from white to red. This means momentum has changed. We have a crossover, and price is looking pretty ugly, guys. When price goes to red, it usually doesn't end very well for bulls, right? So I'm coming in big account, 100% cash. I'm still looking at whether or not I want to trade futures tonight. I'm going to give it a little bit of time. I want to shake out, anybody that might have some cobwebs or that are scared to do anything. And I'm also waiting for buy and sell signals to fire off for me. Okay, in case you're wondering that. So we are at an edge. It's working so far. It's not doing a whole lot, but it is working so far. If we start to break down below this trendy edge, this purple line, 3863.50, we start to break down. What I like to look for, let me go ahead and draw this for you, is once we break below it, just draw a line right here so I can extend it to show you guys. Okay. What I like to see is that we bounce after a lot of people are like, oh, we took out the low. What you want to see is that we bounce back up and then this becomes resistance. What was support becomes resistance. That gives me the confidence that we're going to most likely move down here towards this pivot and that will end up at my next target at 3782. Okay, so right now this is doing what it wants to do, but I just showed you the scenario in the case that we could move back down into the trendy edge, the one that we never quite got to. We were off just a little bit. Okay, all right, so the next one is your 4 hour. And I promise all of this means a lot. Divergence. Here we are. Still a lot of divergence here. All right. And I showed you earlier, the 30-minute is my go-to, I think, for right now. So even if we bounce, this is how you can use risk to reward. Let's say that the trendy edges works very well. And by the time you have dinner tonight or before you go to bed, we're sitting up here. Well, before I take any future trades, I use what's called bracket orders. I always have a stop, a target, and an entry. Okay, that means there is a possibility, as a disclaimer, there is a possibility if some kind of crazy capitulation event happened, there's something called slippage. If you don't know what slippage is, look it up. It's very, very important. I like to have eyes on with my futures. That's just me. So I'm typically not in future trades very long unless I buy options in the futures. Okay, if I buy options in the futures, that completely different. In this case though, bracket order. That means I always have a stop, I always have a target, and my entry is at my levels. So in that case, if I were to take a long right now, okay, it would be off the trendy edge. My stop would be where I'm comfortable, not you, not anybody else, not some furu on Twitter who claims to make $1 million a day, right? But doesn't show you his face and has an office the size of my closet. I mean, these are the things that are truthful, guys. You should really look into this type of stuff. Like, is the guy teaching you about trading sitting in like a closet space, right? You can look for signs to like to give you some clues if these people are legit or not, right? Like a successful trader, there's gonna be signs that they're successful or not. Okay, so sorry, I could just go on and on about this type of stuff. So once we put our stop and we're okay with that, let's say that my stop tonight is 5 points, okay? And my divergence is showing that we could go up to 3,900. That could be possibly 35 points. Then guess what, guys? That means that my risk is 5, but I can make 35. All right. So you could do the math on that, and you can see that my risk to reward is very good for something like this. Okay. Again, now I'm staying super patient. I'm waiting. Notice how we just kind of came into the trendy edge, we bounced, and now we're just kind of hanging out there. Once we start to break down, look for the retest, and we might do this just for a few minutes, just so you guys can see. So let's go ahead and just kind of draw a line right here. Make sure we are there. And once we break down below, see if we could test, kind of come back and test that. So we're going to do this just like this. As a matter of fact, see how I'm off a little bit? We're going to come right there. Okay, just like that. All right. Now what you want to see is that once we take this level out, a lot of people jump on like they're waiting. And they just jump on, and then you get that little flush there. And typically, when they take that flush, it bounces against them. And for anybody that's not used to that, they get scared. And basically, it just pops right back up into here. They get stopped out, and then price comes back down. This is the type of action you're looking for when it comes to confirmation. I don't particularly like the word confirmation because nobody really knows if you're confirmed or not. This is the market, right? We just have higher probabilities if we have a really good setup. All right. So we'll just kind of sit here and wait for a few minutes and see if all this can come true so that we can kind of teach around it. And I just want to show you a couple things as that's happening. Again, I hope you guys are having a good week, man. The sentiment is horrible. People are super quiet right now. Um, it's too bad. Definitely too bad. It makes me sad. Um, it really does. It makes me feel like I don't want you to be hurt. I don't want people, man, I've spent so many hours being upset as a trader. It doesn't matter how good you are. You always feel defeated when times like this happen. It and for me to think that years ago, I was like, man, I could just do something and be super transparent, and that's what people want. They want to see that you're being honest, and I wish that I feel like that's kind of gone to the wayside. I feel like a lot of traders are spending their time, unfortunately, chasing FOMO. They're chasing people who are pretending to do really well, and it makes me sad. And there are some people doing well, but I'm very transparent. I'm very transparent with everybody. I'm subscribed to a couple different services to people who I believe are worth subscribing to for different reasons. And nobody's having an easy time, folks. Nobody. I have not met one person that's doing really, really well. Um, I just haven't. And so when I say that, it doesn't mean I'm doing poorly. What it means is it's not as easy as it used to be. But what I can teach you is how to be consistent. All right. Consistency over the years, I try to figure out like what is it? What is the holy grail? And when I remember when I first started, people were like, the trading journey is personal. And personal means what? What does that mean? I remember thinking like, I don't care, man. I just want to make money. I don't want to hear your philosophy. I don't want to hear your opinions. I just want to make money. But when you follow somebody or you choose to get education from somebody, you have to understand that everyone is different, like their account sizes, their risk tolerance. But if you can find somebody that can teach you a process, trendy levels, a cloud, Fibonacci, and there's plenty of people who I think are getting close, and some, very few services, guys. I would have to say I've been through a lot. I would say maybe 2% of people actually have a process. Um, if you can find somebody with that, try to hold on, try to attach to that, and try to see how that fits into what I was just talking about, your risk tolerance. How does that work for you? If you can apply that, because some people come to trendy trading and they got some really cool thoughts and ideas, and they may monitor other certain things, and then they apply trendy trading to that, and it makes them that much better. So I mean, in those cases, I feel like, wow, why would you like just take your time, all right, and please do your due diligence. Um, right now, what we're waiting for is this line right here. I should just here. By the way, if you guys have TradingView, you have to set up this stuff. If you don't know how to do that, tell me and I'll show you real quick. Anyways, I like to have all this stuff. See, I don't have to write anything. I just click on something like so. I'll say resistance, and see it automatically has a resistance here. For these purposes, we're just going to leave this right here. Remember, what we're doing is we talked about this. We're looking for the flush. This is where most people go short. And then I want to see actually a push back up into that trendy level. So again, this was our target. Now, what we want is what was support. And see, you can't argue the fact, can you? See, it was support. So members taking trendy levels, this was a bounce. Okay. So that balance itself on a reclaim is 3863 all the way into 3874, guys. That's 11 points. For every 10 points, that's $500 with one ES contract. $50 for a micro ES contract. So what we want to do here, though, is you want to be patient. You want to wait for candles to close. You want to commit to the candle. Don't try to speculate. All right. Another important thing that I want to point out to you is notice how we came very close to the cloud and see how it backed off. That cloud is resistance until proven otherwise. Okay. So I didn't put anything out to talk about. Let anybody know I was going live, so I apologize. It's probably I'm not even sure if anybody's in here listening to me, but here I'm not even sure if this thing works. Is anybody know who Pink Floyd is? Hi, is anyone out there? Is it good evening or good afternoon? Good evening, probably. I don't know. Let's see. So it's very difficult. So in this market, I think what happens is there's a lot of speculation. You have to be able to run through time frames very quickly. So let's just say that I wanted to go long here. I've already showed you if I want to go long here, I got to know what my stop is and I got to understand what my possible reward is. So if that reward, like let's say we were to get long here on a reclaim, remember, we're not going short because we're now back over what was resistance is still not resistance. It's support. See, support. So, and it's still over that. But if we're to go long here, let's just say that it takes off on you, right? Sometimes you get super lucky. You take a level and the resistance doesn't resist and you continue to move up. So from here, what you want to do is you want to flip into the next time frame of your choice. So see, this is just a 5 minute. Let's say we go long. Well, guess what? Let's say it keeps working. Now my target is going to be, this pivot high here. And then once we get through that, we most likely pull back, we flag, and then guess what? Go for the target here. Then go for the target this cloud. We use past candles, EMAs, and so forth. And I apologize that beep and noise are my signals that are going out. All right. And let's see what that signal is just real quick. Let's see. And let's go to, all right, auto futures. Let's see what came in. So I had, this is today. I got a sell signal earlier on NQ, on the NASDAQ. I got a buy. Let's look at oil futures just really quick. Everybody loves the fact that gas was going up, right? So we took 3 boats down to the Keys. Um, you don't even want to know. So, I mean, far as like gas for the boats, thousands, you know. And come to find out, we live in paradise. So we live on the water here in Florida as well. But our fishing here is amazing. The fishing in the Keys, I felt like was a little overfished, right? It wasn't great, you know, definitely, but the water is absolutely amazing. We went snorkeling. diving, got to see lobster, shark, which was kind of funny story. My friend was like, it's a nurse shark, and I'm like, oh, okay. So I start swimming over with him. And then we come up on it, and he's just like going to town, like trying to chase it. Not chase it, he swim with it. And I'm like, I'm gonna join you, But the whole time, I was coming out of the water. I had my gear on, but I was coming out of the water trying to get his attention. And I'm like, hey, Kyle, that's his name, Kyle. I'm like, it's not a nurse shark. That's a black tip shark. And he couldn't hear me. And I'm like, that's a black tip shark, man. Like those are actually and can be aggressive. Um, Big difference between that and a nurse shark. And it's about 6 foot. So pretty big fish. And anyways, the time there was obviously something I'll never forget. Had a very good time, but at the end of the day, I think I'd rather just be right here in this part of Florida where we are. Better fishing, um, live music all over. It's just such a great place. And if you've never been here, you got to come here for the beaches, guys. My father was in the Air Force. I was in the Air Force for 21 years. My father was in for 31 years. So you combine those, I've been all over the world and spent most of my life overseas. I would find myself very cultured. I've been to a lot of beaches in my life. I will have to tell you that the beaches here are absolutely stunning. The only difference is that in the water in the Keys is absolutely magical. It's very clear. It can be very clear here, but nothing like there. Hawaii, the beaches there are really pretty. I like the beaches better here. I like the waves better in Hawaii, and I like the fact that they have coral and a lot of marine life. But sorry, just trying to pass some time while I look at a couple things here. All right, still hanging out at that resistance area or support. And let's just kind of type that out right now. And notice how we're being very patient, right? Resistance or support. On top equals support. Below, resistance. Resistance. Okay, we'll just kind of put that right there. So right now, this would be what? It's not resistance, it's actually support. Okay. Uh-oh. So we are having masala tonight, chicken tikka masala, and I see my wife has started the dinner. Um, oh, hopefully she's just done the onion so far. Anyways, so I love cooking chicken tikka masala, and I hope she hasn't touched my chicken yet. Uh, anyways, all right, so here we are. We're just going to stay put. Let's go ahead and look at, oh, I have a NASDAQ blueprint as well. What I like to do is give my members a blueprint. I'm going to teach them all the same thing. I have taught them the same thing. I try to make you a trader, right? Not a follower. Um, Sorry, I'm writing the wrong. There we go. All right, so here we are on this, right? We're down 182 points on the NASDAQ, roughly about 42 points for every dollar in the Qs. Notice that we are underneath the trendy edge, okay? So this guy has gapped down underneath the trendy edge, and now this becomes resistance. But notice we came into my two targets here, all right? So we're looking for support in this range, all right? Support in this range. This is going to be resistance until it's not. That resistance for right now would be 11,724 and a half. And that's what we're looking for. So again, you could find a pop here. And if we came over here into ES, just one more time before I jump off here, is this support or resistance? If anyone is listening, I can't see if anyone's listening. If you have any questions before I jump off here in a few minutes, please do so. All you have to do is write, make sure your chat window is open for YouTube, and then I can answer a question for you. I'm going to continue pushing out 2-minute videos tonight on, on several different charts. Not too many. I don't want to overdo it. I want you guys to be able to just see some of the magic that I put together. Because I think if there's too many charts, it makes people very indecisive. So we'll just kind of wait. Okay. So for futures, my main go-to again is going to be ES, the micros as well on that side of things. ES, Nasdaq, and oil futures. The process, as far as edges and all that good stuff, it works on all futures, corn, wheat, whatever. It doesn't matter. A chart is a chart. We have all the right levels and can identify the right levels and targets. How you trade that is a different story. I'm going to teach you how I trade it, how to at least be consistent and comfortable with your stops and so forth. Okay. I want you to do me a favor though before I end this session. This is what I tell my members. Figure out your number. This number is going to be very important to you. I believe that this number could make or break you. Anytime you trade, again, I trade options, equity, and futures. For options, if you're going to trade options, you have a couple choices here, folks. You can, whatever you pay for that option can be your risk. Say I buy a $3 option, which is $300. I can say, hey, that 300, it's okay if it goes to zero. Why is it okay if it goes to zero? Because my number for my account might be $2,000 a trade. I might be willing to lose $2,000 a trade. So if I bought an option that was only $300, why would I stop it? Especially if it ends up turning for me and pushing up towards or down where I want it to be and making that money. So you have the right to yourself to say, hey, I'm okay with this because it fits into my risk tolerance. How do you figure out what your number is? Well, net liquidity in your account. I'm not a financial advisor, so I can't sit here and tell you what that number is. But what I can tell you is that a lot of people over the years might say something like, well, I'm willing to risk a 0.5%, 1%, 2%, 5%, 10%. Everyone is different. Okay. And because of that, you have to figure out your number. Then I want you to figure out what that is as far as dollar amount. So let's say that 1% of your account is $1,000. I want you to knock that in half because what I find with traders is that they get excited, right? Especially if things are going good for them. They start to buy a bunch of different things and they're like, all right, so $1,000 here, $1,000 there, $1,000 here, $1,000 there. That's $4,000. I made $1,000 this morning. Oh my gosh, everything's great. And then as soon as something goes wrong and everything goes down on them, meaning I don't care if it's short or long, but it goes in the wrong direction for you. Once you lose that amount of money at once, you freak out, you stall, you can't execute, you freeze up, and guess what? Trading is not your best friend anymore. So you need to start off slow. I want you to find out what your number is. What percent are you willing to risk when you get into trading? What is it? And then I want you to cut it in half. And every time before you close the day, I want you to think to yourself and I want you to say to yourself, I am willing to lose this. And if I lose this, how will I feel when I wake up in the morning? Okay. So if I have $2,000 on into Tuesday, by the time tomorrow's over, will I be a good trader if I wake up and my $2,000 is gone? Can I operate? And if you can't, that $2,000 number is not for you. Be comfortable. Even if it means just trading a couple bucks a day. Find out what works for you and then slowly build up. You're not in a race. You're not in a race. Okay? So find out what your number is. If you know what that number is and you figure out that number, I want you guys to tell me. I'm going to put out a tweet later on in the afternoon or this evening, and I'm going to ask you what your number is. And so if you can't figure out your number, please do so. And let's see if you can stick to that. At least start with that rule. I will only risk what I'm comfortable with. All right. All right, guys. Notice so far the trendy edge is holding, and so far this is considered support until proven otherwise. We'll check back in a little bit later. I hope you guys have a great